In today's video, I'm going to be discussing why a recession is by far the best time to buy stocks. I have all the details for you here in this video. Let's get into it and talk about all the details. All right, now first off, when I say the words recession and stock market, what do you generally think about? I'm guessing it's something along the lines of huge down days in the market, downtrends, panic selling, the illusion that the market is going down to zero, possibly huge red candlesticks, and the list goes on and on. However, why does everybody associate a huge recession with selling everything and panicking and push the sell button? I'm not sure about you, but in my opinion, and based on what the charts show us, this is possibly an amazing opportunity to step in and buy some things from those panicked sellers, which, by the way, full disclaimer before we get into this any further, no, this is not advice in any way, shape, or form. I am not suggesting you should go out and buy or sell or invest or anything like that. I'm not saying that in this video whatsoever, okay? I'm just talking about a recession and why this is generally and actually a pretty good time to possibly be a buyer of stock. So again, not investment advice, not trading advice, not advice in any way, shape, or form. Just want to throw it out there really quickly. Just don't want anybody to get hurt financially based on anything, okay? Just please be very careful. Anytime you're trading or investing, things can be very volatile. But anyway, let's quickly talk about this. And again, the charts show us all the details every single time. Yes, generally, when the market falls off a cliff and we enter into a major recession, a major economic contraction, whatever you want to call it, usually, yeah, the market does go down substantially, anywhere between about 30 and 80% in some cases, right? If you don't believe me, just look back at a few different times that we've seen major economic corrections or collapses, like the dot-com bubble way back in the early 2000s, the subprime and the mortgage real estate crisis back in 2007, 2008, 2009, during that time frame. The whole situation we played out and we all lived through in 2020 with the shutdown of the economy and everything like this. Just look at the charts, right? Market goes straight down very, very, very fast. And what does it do? It pivots at some point very, very low, gives amazing opportunity to buy some things, and then it basically turns into a rocket ship, and it goes straight up for years and years and years, right? So my point is, though, so what we need to do is objectively look at the market in these types of situations. So when I said earlier, recession and stock market, generally people have this negative connotation like, panic, quick, let's sell everything really fast. I don't really know about that. You might want to be looking at the buy button instead, right? So here's what I wanted to talk about really quickly here, okay? So in these types of situations, generally, you probably have a pretty good idea that maybe a major recession or major economic situation is coming. A lot of people generally have this foresight. It's not that hard to figure out. Plus, putting in a top on a market usually takes a long time, months and months. The market trades around sideways or it does a whole lot of nothing, and it just kind of bounces around. That's a great opportunity to possibly unload positions and wait for the market to drop significantly. Again, 20, 30, 35, 40, 50, 70, 80%, something like this in some cases, and then possibly get back into better positions. Now, here's why a recession and major economic contraction allows for a great, great buying opportunity. Because of the exact reasons that I've talked about here. Everybody panics and sells. The market goes down a ton, right? And then it offers all of these great companies on sale, okay? Remember this much as well. I mean, obviously, if you're watching this video, you probably already know this, but let me just state the obvious really quickly, okay? First off, what is stock? You're buying a small portion of ownership in a company. That's basically what it is, okay? So when a recession comes in, why does everybody panic and sell? First off, the market starts going down. So it's like this self-fulfilling prophecy, which is, hey, market's going down. I got to quick sell because otherwise I'm going to lose everything. That's not totally true, but that's what a lot of people believe, right? It's going to zero. No, it's not. It's not going to zero. Never has, never will. It's not going to zero, okay? But anyway, so what's happening is that people are panicking out of positions thinking that it's going to go down and stay down forever. It does not happen that way, right? But anyway, when everybody sells out of their positions and we foresee a recession coming in, basically what this does is people sell out of positions because number one, they're panicked, number two, they're scared, and number three, they're thinking that profitability of these large companies or medium or small companies that they've invested in is going to go under, and they're basically going to be, unprofitable, and some of these corporations are going to lose. Basically, they're just going to lose business. They're going to go down, and therefore their stock price must go down as well. So therefore, driving prices down and basically, we're basically investing in profits of businesses, right? That's literally what investing is like literally, hey, I believe in XYZ company. I'm going to buy their stock because I believe they're going to be very profitable going into the future, and therefore I want a piece of that upside. That's literally what we do when we invest, right? We buy into a company just like we believe in that company that's going to succeed. Just like somebody, let me use me for example. Let's just say that somebody believes in me and says, hey, I love the channel, I love your videos, I want to give you $100,000 to invest in your video production and all stuff like this. Somebody's believing in me. They're buying stock in me. Okay, if that were the case, by the way, if you want to do that, send me a message. Let's do it, right? Again, I'm not sitting here fishing for $100,000 grants or something like that. I'm not saying that. I'm simply saying I was using that example, right? So my point is, that's what people do when it comes down to investing. However, when a recession is coming in, a major economic contraction is coming in, that faith in companies, faith in the economy is lost. Therefore, selling out of positions is more prudent because then people think, I don't believe in this company anymore, is essentially what they're saying. But then at the end of the day, what it's really doing is the stock is going on sale. They're saying, hey, look at us. Same great company, same great products, same great services, but now our stock is 50% off. Do you want to buy a little, or are you going to sit there on the sidelines and be scared? Well, think about it when you go into your favorite store. When you go into your favorite store, whatever that happens to be, and your favorite product is 50% off, do you buy one, do you buy two, or do you buy 10? Not sure about you, but I buy as many as I can. When I see my favorite product on sale, 50, 70, 80% off, I want to buy as many as I can. Why wouldn't I, right? Because it's something you can enjoy, it's something that you can get very cheap, and that's the exact same situation here, okay? Same great companies, same great stocks, just going on sale. Think of it that way, right? So when everybody's panicking and getting out of positions, it may be a time to start investigating, hey, which ones of these things do I want to start buying when we may potentially see capitulation in the market? In other words, market has gone down significantly, and we may be pegging a bottom at some point, right? But anyway, this is why a lot of times recessions are great times to buy. Now, another thing too as well, most people don't realize this. What happens during recession? Governments come in and they print trillions of dollars. Just look back at 2020. Between 2020 and 2021, about a 1-year time frame, they printed $6 trillion. Why do you think the market has gone up so much in that amount of time? Where do you think most of that money went? Into the market, right? And into the profits of corporations, because people are buying things. We're buying stuff. Well, do you think that's going to hit the bottom line of companies? Of course it is. So no wonder why stocks have gone up so significantly, right? So my point is, during these recessions, major economic contractions, governments print trillions, hundreds of billions of dollars, and a lot of that money either makes its way into the physical market by buying stocks and equities, or it makes its way into the bottom lines of a lot of these companies because we get money that the governments have printed in the form of stimulus checks or grants or, expanded unemployment benefits or small business loans and grants and free money handouts. Again, it's all over the place. We see it all the time. We've seen it every single time in all these recessions. So then the money is spent on goods and services from these large corporations or whoever, has products and services to sell. And then we're buying all these things. And at the end of the day, it increases their profitability and increases our faith in these companies and therefore drives their stock prices higher. You kind of get it? So it's kind of like a twofold effect here when it comes down to major recessions. So yes, these are amazing and great buying opportunities. So just think of it this way. When the market goes down, just think of it, whatever you want, it's going on sale. It's an awesome opportunity to buy stuff very low and very cheaply and just ride that sucker higher, right? Now, generally, a lot of times, markets can go down significantly, and a lot of times markets can go down much further than a lot of people ever realize, and offering a lot of panic to a lot of people. The best thing to do is just sit back, watch it go down. Watch it, watch it, watch it. When you see the panic coming in and you see panic day after day after day, this is the time to swoop in and be the good Samaritan and buy some of those shares off of those panicked people, right? Here's the thing. If you're not going to be that good person to buy those shares off the panic person, then guess what? Somebody else will, right? Somebody has to be the good person buying those shares off of panicked people, right? Again, this is not like a bad thing. It's not taking advantage of people. Hey, I didn't tell somebody to push the sell button. It's not my fault they sold their shares. It's not my fault that I bought those shares from that person, right? It's the same situation here, okay? If you're not going to do it, somebody on Wall Street, one of the big guys probably will, okay? So just saying. This is what it comes down to. So again, by the way, this is not investing advice. This is not trading advice. This is not investment advice in any way, shape, or form. I am not saying you should buy or sell anything. I'm not saying that, okay? I just want to make that very, very clear here. You got to be very careful with this. But when recessions roll in, this is usually an amazing buying opportunity, especially if you are a long-term holder of stocks or equities or whatever it happens to be. If you want to buy something and hold it long-term, this is an amazing opportunity to jump in, grab things for the long-term, and just kind of sit on those positions, okay? So anyway, obviously I could sit here and talk about this stuff forever. I'm very fascinated by this. Love the markets. I watch the markets literally all day. I been doing this for a long time now, and like what? I don't know, what is that? 17 years? 17 years, I think. I've been watching the markets, like trading actively, investing actively, all the stuff in the markets for, I believe, about 17 years now. Yeah. Since about 2008. So yeah, there you go. Or actually before that even, a little bit earlier than 2008. So anyway, just want to bring this to your attention really quickly here. There's a ton of other things. I can come back in a separate video and talk about more of the details about this in a separate one if you'd like me to. Let me know down below in the comment section. But yeah, I'm going to leave it at this for now. Again, there's a lot more detail. I could sit here for hours talking about all this, and I'm just going to leave it at that for now. I can maybe turn this into a video series about this. But just let me know down below. Otherwise, please subscribe down below if you haven't done so yet. Share the video with your friends on my social media, and go back and check out any other thousands of videos here on the channel. Until next time, enjoy your day. Take care, and I'll catch you.